Here's a question most remote entrepreneurs never ask. If you're running your business from a laptop in Bali or a cafe in Lisbon or literally anywhere outside the United States, why are you still paying taxes like you live in New York City? Because here's the brutal truth. The IRS does not care where you work, but the structure of your business that they care about, and most digital nomads get it completely wrong. In 2026, the average self-employed remote worker is overpaying tens of thousands of dollars in taxes every single year, not because the laws aren't in their favor, but because they never took the time to set their business up the right way. I'm going to show you exactly which state to form your LLC in, the tax selection that saves you the most money, how to use a strategy called the foreign earned income exclusion to legally wipe out a massive chunk of your tax bill, and the 3 mistakes that will cost you everything if you skip this video and do nothing. Let's get into it. The problem: double taxation. First, let's talk about double taxation because it is the silent killer of digital nomad income. Here's how it happens. You form an LLC. Simple, right? But by default, the IRS treats a single member LLC as a disregarded entity. That means every dollar of profit the business makes flows directly onto your personal tax return. You pay income tax on it, and then right on top of that, you pay self-employment tax, which in 2026 sits at 15.3% on top of your income tax rate. So if you made $100,000 this year, you could be handing the government somewhere between $35,000 and $50,000 before you've paid for a single flight, a single co-working day, or a single visa fee. That is double taxation, and it happens to the majority of digital nomads running LLCs who never optimize their setup. Here's what they should have done instead. Choosing the right state, step 1. Where you form your LLC matters more than you think. Now a lot of nomads assume they should just form in their home state, the state they grew up in, or the last state they had a driver's license in. That is almost always the wrong move. Why? Because some states are predatory. California, for example, charges a minimum $800 franchise tax per year just for the privilege of having an LLC, even if you made $0. New York has similar traps. So which states are actually nomad friendly? Wyoming, this is the gold standard. 0 state income tax. Incredibly low annual fees. We're talking $60 a year. Strong asset protection laws. And they don't require you to list your name publicly, so there's a privacy advantage as well. New Mexico, an underrated pick, is one of the only states that allows truly anonymous LLCs, meaning your name doesn't appear on public record. 0 franchise tax, very low maintenance cost. Delaware, this one's famous for a reason. Delaware has the most developed corporate law in the country, which makes it attractive if you ever plan to raise investment or scale into a larger structure. But note, if you're a solo nomad making under $500K a year, Wyoming likely serves you better. South Dakota and Nevada round out the list. Both have 0 state income tax and business-friendly environments. The rule is simple: form where the laws work for you, not where you happen to be born. The tax selection strategy. Okay, you formed your LLC in Wyoming. Now comes the move that changes everything for your tax bill. It's called making an S-Corp election. Here's how it works. When you elect S-Corp status for your LLC, you split your income into 2 buckets. First bucket, your salary, which you pay yourself as an employee of your own company. Second bucket, distributions, the remaining profit that flows to you as the owner. Now here's why this is so powerful. The 15.3% self-employment tax, it only applies to your salary, not your distributions. So if your business made $120,000 and you pay yourself a reasonable salary of say $50,000, you only pay self-employment tax on that $50,000. The remaining $70,000 comes to you as a distribution completely free of self-employment tax. On $120,000 of income, that strategy alone can save you $8,000 to $12,000 per year. Now the IRS will audit you if your salary is unreasonably low. A salary has to be reasonable compensation for the work you actually do. So don't pay yourself $1 and take $119,999 in distributions. That's a red flag. Work with a CPA to find the right number for your specific income level and industry. But done correctly, the S-Corp election is the single most impactful tax move most digital nomads never make. The FEIE, your secret weapon. Now for the move that truly separates the nomads who build wealth from the ones who just survive. It's called the Foreign Earned Income Exclusion, or FEE. Here's the deal: if you are a US citizen or green card holder living and working outside the United States, the IRS allows you to exclude a significant chunk of your foreign earned income from federal income tax entirely. In 2026, that exclusion limit sits at approximately $130,000 per person. That means if you earned $130,000 or less while living abroad and you qualify, you could owe zero federal income tax on that income. To qualify, you need to meet one of two tests. Either the bona fide residence test, meaning you've established genuine residency in a foreign country, or the physical presence test, which requires you to be outside the US for at least 330 days within any 12-month period. Mistakes to avoid. Before we wrap up, I need to flag the 3 mistakes that will unravel everything we just talked about. Mistake number 1: ignoring state nexus. Just because you formed your LLC in Wyoming doesn't mean you're safe if you spend 6 months a year working from California. California is notorious for claiming that if you're doing business in the state, you owe them taxes, period. Know your nexus rules. If you are spending significant time in a high tax state, talk to a CPA before assuming you're exempt. Mistake number 2: skipping the registered agent. Every LLC, especially in a state you don't live in, needs a registered agent. This is the official point of contact for legal and government documents. Skip this, miss a notice, and your LLC could be administratively dissolved without you knowing. Services like Northwest or Registered Agents Inc. handle this for $50 to $150 a year. Do not skip it. Mistake number 3: no separation between personal and business. This one will pierce your corporate veil, meaning a court could rule that your LLC offers you zero liability protection. Keep a dedicated business bank account. Run all income and expenses through it. Never ever mix personal and business money. These mistakes are avoidable, but only if you act before they become problems. If this video helped you, hit that like button. It genuinely helps this channel reach more entrepreneurs who need this information. Subscribe if you haven't already, because every week we break down business, tax and wealth building strategies for the freedom economy. And drop a comment below. What state did you form your LLC in, or what state are you considering? I read every single one. I'll see you in the next one.